Hi everyone, welcome back. Here's a simulation that I wanted to share with you called Financial Fitness for Life. It's all about investing, and I have skipped through the interactive quiz segment, and you'll have a chance to go back and investigate this link on your own, but I wanted to show you how this works. In the first simulation, this assumes that you are going to be able to save $100 a month and earn $15 a month for every question that I just got done answering in the first quiz. So I have earned the right to invest $250 per month from the age of 30 until age of 65, which most people target their retirement at. So if I can earn 8% interest compounded monthly, this is what's going to happen. As you can see here at the top, my monthly savings is $250. I'm going to save money for 35 years at an average of 8% interest. And according to here, the red indicates my cash that I actually put into the portfolio to save for my retirement. And this is the power of interest, all this blue area here. So as you can see, interest is very powerful, and I've saved $573,000 if I were saving $250 every month, regardless of what was happening in the market. So you have to remain constant and true to your target goals. So in the next phase, it continues here and says, what if I started earlier? What if I started at age 24? If I did that, would I be able to save more money? And obviously the answer is yes. Let's see how much difference it would make if I started saving just 6 years earlier than the average investor, because most people don't start saving their money for retirement until at least age 30, some even later, and that's a mistake. So we're trying to encourage you to start as early as possible. This is 41 years of savings at $250 per month at an average interest rate of 8% annually. That gets us almost $1 million in the bank. Now we got to account for the rate of inflation, but you can see that it's still a considerable amount of money, and we will get that on top of whatever pension or Social Security income we have at retirement. So let's play with this a little bit. If we were able to find a target of 11% instead of 8%, what's the power of interest going to do then? So as you can see, it's going to go well over $1 million and almost hit, oh, there it goes, $2,400,000. So obviously 11% is a pretty generous target, but you will see in some of the other videos that I go through that talk about mutual fund targets that it is definitely possible to find those kinds of savings instruments. Now, this gives us the option to change our settings. So I'm going to go through and say, all right, just for kicks, what if we started off at only $100 per month, but we were going to start saving right away, right after high school, or maybe even right now? Let's reduce this to 8%, which is a more reasonable target. So if we hit calculate, it's going to start again. But even at this, if we start at age 18, instead of waiting until age 30, we're going to make a lot more money in the long run, even if we only save $100 per month. Look at that, $621,000 at retirement age for only $100 a month. Come on, that's pretty good. So as you increase that dollar amount, you can have a lot of fun with this and go back to say, okay, what if I did $300 a month? And I'll max it out in just a second. But you can see that this interest is going to skyrocket and add to our overall retirement savings at age 65. So the target, try to find a number that helps you be comfortable in your retirement age. I know it's hard to think about, but if you don't start planning now, you're going to miss the boat. This maxes out at $999, but just for kicks, let's see what happens. So this is almost saving $1,000 a month, and obviously we're not going to be able to do that right out of high school, but at some point in your professional career, it's not unheard of for you to reach that. So by age 65, we're looking at $6.2 million. Pretty cool. So that's all I have for you right now. I just want you to understand that this is real. This is stuff that I know my parents and others that have saved over their lifetime were able to achieve. So it's important for you to try and find a target that makes you comfortable. You know, what's reasonable? I think that starting at $100 or $200 like this particular sim will show you is not completely unreasonable. If you did this, you would definitely be on your way toward financial freedom in the future. And who knows, if you are able to save a lot more than that every single month, then you could definitely think about retiring early. So wouldn't that be nice? Anyway, that's all I have for today. I will go over more detailed information about how to read stock charts and find mutual funds that have the potential to make you a lot of money in the future, and we'll look at that in our next segment. Thanks.